Hey everybody, my name is Brandon from thestocksnews.com, and today I want to talk about Zomedica stock, ticker symbol ZOM. What I want to do first is go into Google and talk about why the stock is jumping up 500% in just 3 months. And then I want to go into their earnings report to talk about the fundamentals of the business, and then I want to go into the trading charts to see if there's a level or two to buy Zomedica if we want to buy Zomedica. So now let's get started. So here we are in Google, and what we're looking at is a year-to-date chart of Zomedica's trading charts here. And as we can see, in about 3 months, we are up over 500% in just about 3 months. So why has Zomedica been rocketing higher? Well, of course, firstly, we should look at the news of what's going around Zomedica stock, and we can see that a lot of people are talking about Zomedica's new product, which looks to be a veterinary diagnostic tool called Truforma. Basically, how veterinarians use Truforma is that the vets take a swab from the dog or cat and they put the swab in the Truforma machine, and then Truforma outputs some diagnostic information on what could be causing the dog or cat to feel down from thyroid or adrenal issues. Why Zomedica has been surging year to date is because of the release of Truforma was slated originally for March 30th, but the company released their product early. The timing of Zomedica's product release is actually quite good for the company in general. Since the health crisis in 2020, a lot of families have been adopting new dogs and cats, probably as an attempt to fill the loneliness void in their lives. Firstly, as a human, I think that this is a great thing that a lot of animal shelters are now empty and that the dogs and cats are finding new homes. Because of the influx of pets, however, this will likely be a macro tailwind for companies like Chewy, Petco, and maybe even Zomedica. This growth of the number of pets leads to growth in the total addressable market for Zomedica, which is a good thing and is what I like to see in a growth story. Also, the distribution agreement with Miller Veterinary Supply will definitely help Zomedica get its products to their growing market. The last thing I want to talk about the macro picture of Zomedica is competition with specifically IDEXX Labs, another maker of veterinary technology. This is the main point I want to make in the video, which is that, in business, you really need to pay close attention to who your competitors are. If we take a comparison of IDEXX and Zomedica, take a look at the difference in market cap alone. IDEXX is sitting at a cool $41 billion market cap and a PE of around 72. Now let's compare Zomedica, where we have a $2 billion market cap and no PE because we're not capturing any money in revenues right now. Now, honestly, it's not really a fair comparison here, but it's the comparison that best makes my main point. These two companies are in different stages of life. We can see that IDEXX Labs was founded in 1983 and Zomedica was founded in 2013. So IDEXX has a lot more time to build its business. But that said, a high school senior also had more time to build their muscle, and if you were a skinny, lanky, more brain than muscle freshman like me when I was in high school, I wouldn't want to be competing against them in a head-to-head wrestling match. The reason for that is because the probability that I will get crushed is pretty high. So pure muscle against pure muscle, Zomedica will probably not be able to compete against IDEXX because IDEXX has about $40 billion more in market cap to play with and about $300 million more in cash equivalents to play with as compared to Zomedica. And this cash equivalents and market cap is basically the muscle in this analogy. Because Zomedica is a smaller business, what they need to do to grow is to outthink their competitor. Mostly what I'm talking about when I say outthink the competitor is ways to improve their product and innovate new products so that it outperforms IDEXX on all standards. This will leave the customers, the veterinary offices, no choice but to choose Zomedica over IDEXX. They need to focus on ways to beat IDEXX on a chessboard and not on the wrestling mat. The risk that you take as an investor in Zomedica is that they are unable to outthink IDEXX, or if IDEXX just outspends Zomedica so that the chess game doesn't even matter anymore. Speaking of chess, just wanted to, give a subtle flex here and say that I was the best in my high school when I was a freshman. And as a school, we did win a grand total of 1 whole matches the entire season. But, that being said, after talking about the macroeconomics of what's going on with Zomedica, now let's head on over to Zomedica's earnings report so that we can see how Zomedica is doing as a business. So here we are in Zomedica's earnings report, and the first thing that I want to point out is that this report is based on everything that is up to December 31st, 2020. This is an annual earnings report. So up until then, Zomedica was not selling any products at all. So if we look at the revenues here, they are not declaring any revenues because, no revenues were made. However, we can still get an idea of how the business is doing is if we look at the operating expenses, which I pulled up in this tab here. So these operating expenses are reported in absolute dollars. So basically what I'm saying is that this loss from operations is a total of 16 million United States dollars last year. This is an improvement from our loss from operations last year, which was $19 million. But it is important to point out that not all of this money is actually flowing out of our business, because if we look at the detailed view of the expense block here, which is all this stuff, we see that we have things like depreciation and amortization. So because the counting in stuff like depreciation and amortization, that's actually not really cash that is flowing out of our business. So in order to see the actual cash flows here, we have to look at the cash flows. So if we look over into the cash flows, we see that our increase or decrease in cash is actually increasing last year. So how are we increasing our cash by $61 million if we are not selling anything? And if we look at the detailed view again, we see that we are gaining this cash from financing activities. So these financial activities is basically relatively free money that they are, quote unquote, making through financial engineering actions like secondary stock offerings, which basically means that they are adding more stock into circulation. And this is incredibly dilutive for shareholders, and not exactly what I want to see if I was a shareholder in Zomedica. So lastly, the final point that I want to make in Zomedica's fundamental analysis here is valuation. Like I said before, we are not making any money. So the money that is coming into the business here is mainly through secondary stock offerings. So the question you should ask yourself before you invest in Zomedica is, why do you think that the company is worth $2 billion? Possible answers you could say, and maybe I would agree with, are that the total addressable market for their products is pretty large, because 67% of American households have pets, so that they have a large growth potential in order to reach those 85 million customers. Again, maybe a good answer, but you have to consider a couple things, like the probability of them being able to capture a majority of that market. You have to also consider competitors in the space like IDEX Labs and how long it could take to capture the majority of the market. So again, there's no really right or wrong answer on why the company is worth $2 billion here. That's something that you have to come up with an answer of yourself. So with all that said, let's head on over to the trading charts to see if there's a level or two to buy Zomedica if we want to buy Zomedica. So here we are in Zomedica's trading charts here, and we can see that we are actually very volatile right now. Some of these moves are like more than 20% intraday. So looking for support and resistance levels here, I would say that our nearest support level in the stock chart is around the bottoms of these candles where we closed around the 180 level. But notice how some of these candles really knifed down through that support level and into the $1.20s. But then after we knifed down into the 120s, we then rebounded hardly back up into where we closed around the 180s. And we actually did that twice, once over here and once over here. So what that's telling me is that the 180 level could be a good support level for the stock, but there also could be opportunities to pick up the stock in the 120s. So if we look, this $120 level was where we broke out from before we started climbing the ladder upwards. If I wanted to step into Zomedica, this 120 level would be the first place where I would be looking for an opportunity. Looking at the MACD here, which is a measure of momentum, honestly it's not telling me that much. We are slightly negative on the MACD, which is telling me that the short-term momentum, which is the blue line, is slightly lower than the long-term momentum, which is the orange line here. The RSI, which is again another measure of momentum, it also isn't really telling me that much, because we are really just waving out calmly here, neither in the overbought territory, which is above the 70 line, or in the oversold territory, which is below this 30 line. So because we are pretty flat, that is telling me that the momentum of the stock is pretty flat as well. So that was my review on Zomedica stock. Let me know what you thought about it in the comment section down below. If you have any questions or caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching, and I hope you have a great day.